Ladies and gentlemen, it is my pleasure to welcome you to today's Investor and Analyst Webcast presentation on the occasion of the presentation of our half-year results 2024 as per yesterday. Kommunalkredit has continued in a leading position to advance sustainable projects across Europe. And we have succeeded in doing so despite the geopolitical tensions, whether it's ongoing wars, whether it is a challenging macro environment of high interest rates and high inflation. And consequently, we have completed a very successful first half of 2024. Not only have we delivered outstanding results, also our new owners have succeeded to complete the ownership control procedure together with the European Central Bank, and accordingly we had on the 15th of July a change in ownership. Today's ownership of Kommunalkredit indirectly is represented by approximately 80% by Alter companies, 9.9% each of our former shareholders are Tester and Interitus, and eventually 0.2% of Gemeindebund Österreich. Not only that the change in ownership has been completed, incrementally as part of the change in ownership, we have been contributed with another 100 million of incremental capital as of the 29th of July. The market has remained resilient. It has grown by 130 billion over the first half year. The 130 billion of the first half year are very much comparable to the growth of the market in 23 and 22, which respectively grew by 131 billion and 134 billion. So had demonstrated its resilience despite a number of macroeconomic changes, despite of geopolitical tensions. A highlight is certainly that we have succeeded in growing our net interest income by round about 10% to 90 million. Our operating result grown by close to 20% with 62 million, and we have succeeded in a cost-income ratio of 39% that all contributed to deliver a return on equity after tax by 19%. In order to get there, we have underwritten approximately 1 billion, which is a growth by another 30% compared to last year. Our loan portfolio demonstrates a compound annual growth rate of 12% over the past 4 years. Our new business in infrastructure and energy has grown year on year by 30%, contributing to a compound annual growth rate of 16% over the past 6 years. The core focus of our business is founded on 2 pillars. One is the acceleration of the green transition, and the other one is helping to improve people's life. Accordingly, we have set ourselves 4 commitments that we wanted to conclude the latest by 2025. The first being that 40% of our newly underwritten infrastructure energy business is supporting the green transition by more than 40% of the annual underwritings. The second, that up to 10% of our new infrastructure energy business in the green transition is contributing to new green solutions where the bank is sitting very much in the driver's seat or contributing innovation. And lastly, we want to contribute with more than 30% of our annual underwritings in the infrastructure and energy business trends towards social infrastructure, digitalization and communication. Against those targets, we have contributed so far in the first half year 34% to the green transition and have left in the first half year slightly behind target, which will be exceeded by end of the year. We have contributed already 24% of our new business towards new green solutions and innovation, and we have demonstrated a very strong contribution to improve people's life with 48% of our new underwritings. 2023 was a record year, notably in the second half, on the foundation of a very strong first half in 2023. This being said, again, we have succeeded to grow our total income by more than 16%. We have admittedly grown also our total expenses by 17%, but given that those were on a very low cost foundation, we have improved again our cost-income ratio from 42% to 39%. This all has contributed to grow our result before tax by about 13% and our return on equity after tax to 19%, with a capital ratio that is 16% strong, that is standing at 16%, And more importantly, our equity ratio has not only stood at 16%. Since the beginning of the year, we had grown in the first half year our capital basis by close to 20%, adding 100 million incremental capital from retained earnings that were earned in 2023. The key drivers of our business remain further business growth, our cost discipline that we have evidenced over the years since our privatization, our continuously low risk cost, and importantly, our high discipline in using our capital very efficiently. Kommunalkredit has demonstrated always since its privatization that it is very disciplined in the capital development. The privatization started as a capital basis by 170 million. Despite having paid dividends of close to 100 million over the years, we have grown our capital over the past 7 years to close to 700 million as of now. In this context, whether it comes to the counter-cyclical capital buffer, whether it comes to the combined buffer requirement or the Pillar 2 requirement or Pillar 1 requirement, our capital ratio excels all requirements significantly. Foremost, our funding strategy is strongly supported by a number of macro trends. Number 1, the digitalization. Number 2, energy transition. And number 3, healthcare. In order to fund our growth in our business, we tap diverse funding sources, whether it is in the deposit space consisting of wholesale deposits and retail deposits, whether it's in the capital markets. As of today, the composition of our capital markets funding represents 38% of our total funding, and the deposit basis represents approximately 62%. With the diversification of our funding sources and our activity in the funding markets, we have delivered a very strong liquidity position exceeding 1.5 billion. The combination of these measurements have led to a very strong liquidity cover ratio of 467% and a net stable funding ratio of 132%. Foremost, our portfolio composition is classified as representing a very low risk profile and a very high asset quality. On the right-hand side of the chart, you see the total portfolio by region, by borrower and by rating. And you will notice that 60% of the portfolio is representing an investment grade rating, of which 31% of the total exposure are either rated AAA or AA. Equally, you see a strong focus on the European Union, whether it is Austria, the Eurozone, or the rest of the non-Euro European Union. With very great pleasure, we had received back in March of this year the notification of S&P that the rating of Kommunalkredit has been lifted to BBB flat with a stable outlook. And more importantly, in the context, we were confirmed that we had outgrown by far any former peers in the BBB minus area. This is giving us the courage and the confidence that we can further improve the rating based on our discipline in cost, based on our vision and mission to grow the revenue basis, benefiting from secular tailwinds of the infrastructure energy segment, and a very strong ongoing contribution of high levels of return on equity. Our formula for success in 2024 thus far has been production of a market-leading return on equity after tax, which is standing at 19%. We have used all the capital that our shareholders have given us by retaining the earnings of 2023 in terms of employing those funds successfully, which represent an increase of more than 20% of our Core Tier 1 ratio. And the combination of this has been invested under very rigid and strict risk-return parameters. The combination of the EBITDA discipline in conjunction with the strength and the resilience of the market has been our formula of success for the first half year, and thus the foundation for the success that we will be delivering for the full financial year of 2024. My guidance for the year is, foremost, we will excel our 2023 results. And my guidance of the year is that, again, we will be producing earnings after tax that will be stronger than the earnings of our tax back in 2023. This further and incremental growth of capital that we will evidence by the year end of 2024 will further propel the results and the momentum of the bank in the financial year 2025. For 2024, my guidance is that we will underwrite approximately 2 billion, so we will double what we have done in the first half year. We will maintain a core tier 1 equity ratio in excess of 15%, and our average portfolio rating will be at least BBB+, if not again, as in the past years, A-. The medium-term ambition is to maintain our very high retained earnings, to maintain a strong capitalization, which will always represent a core tier 1 ratio in excess of 50%, a high-quality asset portfolio, and a new business focus on sustainable infrastructure with more than 40% invested into the green transition and more than 30% in improving the people's life. This all together with the high rigid standards that we have adopted and that we have applied over the past years since 2018, both in terms of cost discipline and risk discipline, to lay the foundation of delivering also in the years to come an outstanding return on equity.